Aloha, Stan Cox here, Principal Broker and Strategist at SC Finance Strategies and Insurance Consultants, author of the Tax-Free Cash Growth Warehouse Strategy and the books of the same name. This is Answers to Frequently Asked Questions about the Tax-Free Cash Growth Warehouse, brought to you by SC FSIC.
This frequently asked question is, how can you earn interest on your income tax payment? I know this is an otherworldly kind of an idea. In fact, it's so strange, Google doesn't even know what to do with it. If you type in earn interest on income tax payment, the search engine will return all kinds of things about interest charged on income tax and tax on bank interest, etc. So, is it even possible to earn interest on tax payments? Yes, there is only one way that this can be achieved, and it is through the TFCGW strategy. Here's how it works. First, you need to get a tax-free cash growth warehouse account established. And now I'm going to use a specific example so we can see the actual value of this strategy. Okay. For this example, let's say we have an income of $5,000 a month and we're self-employed. Now, this will also work if you're not self-employed, but in that case, you would need to work with your payroll department so they do not withhold your estimated income tax. Now, if you earn $5,000 a month, your federal income tax will be about 25% or about $1,250 a month. If you were to send a quarterly estimated income tax payment to the IRS, that would be about $3,750 for the quarter. And that's what we used to do before we discovered this awesome strategy. Now, even though this tax isn't actually due until the end of the year, does the IRS pay you any kind of interest at all on that money? No, of course not. So that means you're not only restricting the use of your money, but you're also paying the opportunity cost on it. Check our fax answers for more on opportunity cost. So, instead of sending your money to the IRS for them to play with, put that money into your TFCGW account. And currently, our TFCGW accounts are earning 6.2% compounding tax-free dividend interest. Continuing on, putting your estimated tax into your TFCGW account, by the end of the year, you've put $15,000 into your TFCGW account, and at 6.2% interest, you've gained $586 in tax-free interest. Now, I'm not an accountant, but this is how I came up with the $586. I was taking the $3,750 estimated quarterly tax amount, deposited into the TFCGW account, added 6.2% interest, then divided by 4 because it's the quarterly estimated tax, right? Then I added another $3,750 plus the $58.13 interest, which it had gained over the quarter, which gives us $7,558 for the second quarter, and then add 6.2% divided by 4 because it's compounding now. But again, for only one quarter for that amount, and then again for the third quarter and the fourth. Now, I realize $586 isn't a fortune, but it's a whole lot better than nothing, which is what the IRS is giving you, right? Add to that the restricting of the use of your own money and paying the opportunity cost on top of that because you send it to the IRS. Okay, now comes tax time and you need to pay the IRS their $15,000. So here's what we do. We leverage the money in our TFCGW account for the $15,000 tax bill and pay the IRS. But again, all the money stays in the TFCGW account, earning more compounding tax-free interest. Yes, there is a 5% simple interest for the leveraging, but that still allows us to earn 1.2% above that. And it continues, the whole amount continues to compound. So in reality, we recapture all of the tax we pay. Plus, we continue to earn compounding tax-free interest on the money. If you haven't yet, watch the TFCGW webinar, Become Master of Your Financial World. There, you'll see an example of paying for cars with the TFCGW strategy and how you can recapture up to 700% on those purchases. Well, it works the same way for income tax payments too. So click the link below this video and watch the webinar. And if you like what we've been sharing here, please subscribe to this channel. You'll be notified as we add more facts, answers, and other content.